Hey there, Blockhead Traders. Here, Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of December 22nd, 2024. And in this week's episode, I'm joined by fellow Blockhead Trader viperxl007, and we are going to take a look back at 2024 and kind of just reflect a little bit about our trading performance, things that we did, things we found interesting, lessons we learned, any sort of highlights that we kind of have as looking back on the year. And then we'll just take a brief moment to kind of go over anything that we might be looking forward to in 2025, any kind of new goals that we might be setting out there for ourselves, things like that. So this is going to be our yearly reflection episode. So stay tuned. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts, so subscribe to us there, and if you can't find it, let us know and we will get it there. But let's hop to this week's content. Viper 2024, just about done, and I have my annual or my Blockhead Traders glass here this evening, filled with a little bit of local spirits, and I am ready to kind of reflect back on 2024 because I think it's been a pretty good year, at least for me, and I think it's been one of my best trading years, I think, that I've had since I started. Back in 2019 is where I credit myself as really starting down the current trajectory I'm on. And, you know, I'll kind of touch on some of that. But I would be remiss if we did not mention the market's action today. I mean, we've been on a heck of a upswing from the elections in early November. And, you know, we talked a little bit about a Santa Claus rally and everything. Well, today was the Fed meeting. And it's one of those times, right, where everybody knows what's coming and everybody talks about this is what's going to happen. This is what's going to happen. And then what everybody says is going to happen pretty much happens. And the market loses its mind. I don't know if it's like a momentary lapse that we're in, but basically the Federal Reserve cut by 0.25% today, and they gave forward guidance saying, yeah, you know, things are looking pretty good. We're probably going to slow down our rate cuts, and the S&P just dropped out. The NASDAQ fell, I think, over 3%. The Russell was down over 3%. I think this was the Dow's 11th losing day in a row. I think that hasn't happened since maybe the 1970s or something like that. And so Christmas isn't even here yet. And I feel like the Grinch is trying to show up and steal all of our trees.
I can feel that. Yep, for sure.
So, I mean, were you caught off guard by this? Were you, I mean, do you have any skin in the market game right now?
Well, I think longtime viewers know where my game skin is.
How'd this go for the crypto markets? Because I didn't even look at those today.
It's been bad. So to answer your question, yeah, that's caught me off guard a little bit. So it's in, I guess, I'll touch more on this in a little bit because it wraps into my year in review, lessons learned, all that good stuff. But it did catch me off guard a little bit, and it's without spoiling or giving too much away about the discussion to come. It is emotional. I'm detecting the emotional attachment to that surprise, and that is something I am trying to be more aware of, but it is particular. So the reason why it has this emotional attachment to it is just last week there was a massive liquidation dip. So obviously in I mean, in all markets, like you said, things have been up, 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 up. Bitcoin has been crushing all-time highs, peaked all the way up to around $108,000 per golden coin, which is crazy. So last week, so that happened before last week, and it felt like everything felt super juiced, super overcharged, super hot, super overbought. And so last week we had, like I said, I don't even know that it was tied to anything specifically, but it was, we'll call it a liquidation sweep, a liquidity sweep. Happens all the time in any market. But there was a big dip, pretty excessive, because every one of these sweeps in the crypto land is just an exaggerated, more, harsh version of what you might see in equities land. So that really, really caught me off guard, and I took some big knocks on that last week. But per the TA of up, 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 the fact that it dipped so hard, so fast, and then kind of bounced back, it was like, okay, cool, glad that's over. That was healthy. Now let's resume, please. And so then we get to today, and resume was not on the menu. Well, resuming down, if that was what you were looking for. So that part I was not expecting, and did catch me a little bit, off guard this time. Got a little bit more burnt today as well, but it is what it is. This is, so I can unpack that a little bit more in a little bit, but yeah, it's been across the board.
All right. Well, we're here to kind of reflect back, and so I guess we'll let that lie there and see how things shape up moving forward. But I'll go ahead and start off kind of my reflection back in 24. And I'm pretty proud of kind of the accomplishments and the gains that I've had. If you'll recall, probably about mid-year of 23, as around the summertime, I really went back to my bread and butter. That's selling the extended volatility and really that premium selling. And I just turned everything back around. Like, I'd really been experimenting before that. And so mid-year 23 went back to that, and I stuck to that game plan throughout 24, and I locked in, my best trading performance so far. But that's actually not what I'm the most excited about over 24. So I've had this goal of mine to build the portfolio that I have up to what's known as portfolio margin. And so once you reach a certain portfolio size, every broker is a little bit different, but your broker can give you what's known as portfolio margin. And portfolio margin is where the broker says, okay, I'm going to decide how much margin to give you. Most brokerage accounts, when you get a margin account, it's governed by Reg T margin. So it's regulated by the trading boards on how much they have to hold back for margin. But once you reach a certain account size and a certain trade length, the broker is shouldering some of that risk. And the cool thing about that is, aside from just being a milestone, is the way that they calculate your margin is a lot more based on the risk in your portfolio. And that was always big for me, because the way that I trade delta neutral. And what that basically means is my trades don't really carry much market movement risk. So if you're truly delta neutral, that basically means delta is the rate of change of your portfolio relative to the change in the market. So if you're delta neutral and the market moves up, your portfolio doesn't move. If the market moves down, your portfolio doesn't move. And the reason that, you're like, why would you ever have that portfolio? Well, it's because I make my money on selling time premium and volatility premium. And so I don't need the market to move to profit. So because a lot of my trades are delta neutral, the amount of margin required to hold those positions under Reg T is not substantial, but it's more, because they don't take into account that risk balance. But portfolio margin does. And so when you switch over to portfolio margin, the amount of money that you have to put up for a trade is dramatically reduced if your trades are low risk trades. Yeah, portfolio margin, big feather in my cap. Very, very happy that I kind of achieved that. And the other thing that I kind of achieved a little bit here, and I want to switch over to my browser to show this. And this is something that you can see. This is my thetagang.com. So if you go to thetagang.com/sprocket888, you'll find all of my trades that I put up there. And I wasn't really trying to do this, but it was very interesting how this kind of came out. So first note here that I basically locked in about a 67% win rate. And I had logged about 120 some trades on here. And that's not super amazing, other than I usually try to play about a 16 to 30 delta strike, which basically means statistically I should win about 70% of the time. Now, not every trade is that way. Sometimes I get more aggressive and things like that, but generally speaking, the statistics work out exactly that. So those delta numbers really, really, really are real. But the cool thing here is I'm going to scroll down on this side, and these are basically all the names that I played, and then how much capital, how much premium I collected from them. But what I want to kind of call out is every single one of these trades are green until you get to the very, very bottom. And then I got a couple of red ones. Now, the reason I caveat these red ones is these are all trades that are still in flight. And so my strategy is a lot of times sell the premium, then roll. If you're breached, roll the strike. Once you get assigned, sell covered calls against it, sell puts against it, depending on which way you're assigned. And the reason all these trades are green is because by the time I'm all packed up and done with the trade, I've gotten my premium back. Now, some of these went longer than others, but at the end of the day, they work out as premium collection things. And so these things at the bottom are currently open trades that have been breached. So they're currently in the management phase. And so, yes, it's the end of the year, so they're here as losses, but I didn't realize how many green wins I had, at the end of all of that. And there was losses in between, right? So some of these trades I were initially lost, right? I got assigned, I lost more than my premium, but then I collected dividends, I sold things against them, and basically battled back up into green. And so I thought this was a really cool statistic, Viper, just to have such net green on all the positions.
Yeah, for sure. I mean, and I think it really speaks to the process, the fact that you have covered it extensively on previous episodes, the methodical wheel of your specific mechanism, how you reliably capitalize and capture those statistical odds in your favor. So yeah, it's always cool to see stats be stats and do stats things and pan out like that.
Yeah. So Viper, another data point that I want to bring up, because a lot of people say, well, I don't have time to trade this or that or the other thing, or I don't want to learn it, or, I just want to have somebody else manage my money, things like that. And so I always tell people that's perfect. That's perfectly fine. If you don't want to take the time and invest in it, then don't, because your success is going to be dependent on how interested and how dedicated and stuff that you put into it. But if you go that route, one of the things I tell people is you need to benchmark yourself against something, because everything you do in life is a trade-off from one thing to another thing. And so one of the benchmarks that I like to hold myself to is the performance of my portfolio relative to an index, relative to like the S&P. And so I switched brokerages and about midway, maybe about 4 months into the year, so around April, May timing, I switched over to Interactive Brokers. There's an episode on it, but it was more for fees and commissions and stuff like that, margin rates. It was much better. But what I want to bring up here is they have something in Interactive Brokers which shows you your portfolio performance, and you can change the weighting that you're going to weight it against. You can weight it against the S&P. You can weight it against the Russell. You can weight it against the NASDAQ and things like that. And so what I want to show here is basically this is my portfolio performance. Now, it didn't really start until kind of May. So this very beginning part is March, April, where I started depositing my funds and started making trades. This purple line here is the performance of the S&P, which, by the way, has had a just absolute a record-breaking year. We've had several of those recently. And everywhere that you see this green, this is my portfolio making money, basically profiting above zero. Anywhere it's red is basically below. I'm having a negative return. And then this purple line is the performance of the S&P. And what I want to kind of call out here is that for good chunks of the year, I was outperforming the S&P. Now, where I stand right now is I'm almost right in line with the S&P. So the data point from today, my portfolio has a cumulative performance over the past year of about a 22.7% return. The S&P is at 26.85% return. So this is something where I'm working to get better and better. This big negative were some drawdowns and some trades at that time. But to me, I enjoy what I do. I enjoy my strategy. I enjoy honing it. And honestly, my strategy is really not dependent on the S&P. So I talked about that delta neutral strategy, and I don't have the data points to have up here, but I do believe that my strategy should return similar performance no matter the market conditions. Maybe in low volatility it wouldn't, because I basically sell volatility, and I'm sure it gets some impact to it. But this was just really kind of reassuring to say, hey, I am beating the S&P, not all the time, but I enjoy what I'm doing. I enjoy my learning. And this kind of keeps me grounded to know that I'm not off my rocker too far, being only slightly behind the S&P right now. So yeah, Viper, that's really kind of my reflection back on my year. Big accomplishment there was the portfolio margin. Really happy with the performance of all of my trades. Really just happy to be back to my bread and butter on that premium selling, looking for that extended volatility. I've really been trying to be more selective in my trades, and I think that really showed this year as I look back on them. So I know the equity world is not where you spend a lot of your time, but where exactly have you been doing in 2024, and what are your reflections? What are your highlights?
Oh, highlights, lowlights, midlights, volatility. We talked about the space that I'm in and how volatile it is.
It's hard to sell that volatility. If it was easier, I'd be there.
Oh man, you're not kidding. So mixed bag. I mean, overall good. Like, so there were, I took some really big winners this year. I took some really big losers. But overall, a lot of good things came out of the year. So basically, my core portfolio is kind of split between two separate realms. And I've talked about this. We've talked about this a little bit on previous episodes. And when we start a spinoff show, Blockhead Investors, we'll get into the other side more deeply. But so I have my more investment portfolio, which, if I do say so myself, has been insane. Truly, legitimately insane. So that was my first foray into the market. Was this particular bag of a rollover retirement account from my previous job. I was so early on in my career, there really wasn't much there. When I got my new job, significant pay increase, a whole new retirement setup and whatnot. So I just took full control of that old account, and turned that into my investment account. And so there is absolutely no trading in there. The trades on average, the positions on average are 1 to 4 years that I have them. But this past year I did some maintenance on there when we had ETFs open up and positions that I had in there for a while since 2014, kind of rolled things around a little bit. So that account overall is on the order of, I think last time I looked, since 2014, it's up 1,800%. Not too shabby, but
Nice.
but this year specifically, it's up 45%. And so that was good to see, and it was good to see because, like I said, I did more shuffling around in that account. And so my plan going forward, kind of projecting a little bit into 2025, is to now start to lock in some of that investment, and have some powder ready for some additional investment opportunities, things like that, that I'm looking forward to in 2025. So that side of things went really well. 45%. I think you showed 22% for the S&P. So I will take that all the time.
Yeah.
On the trading side, my reflection has been, and I've talked about this on several previous episodes, and then I've talked about the struggle on recent episodes as far as just struggling in general to get consistency. But the big wins on the trading side of things were some of them financial, but the biggest wins have been confidence in honing my skill, my craft, my chart reading. I've had some huge wins on chart reads that I didn't even take a position, but I read a chart. I had levels, and it's probably most probable to do da 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 da, and then just seeing that actually play out. So when I do these charts, like anybody that's getting into charting, always literally put the things on the chart, put the lines, put the notes, put whatever. And then if you're using something like TradingView, that stuff sticks there, and let it stick there, because then you move on, you come back to the chart and you're like, holy smokes, like the power of hindsight, except you logged your thoughts. You come back and you're like, man, who charted this? It looks like you did it in hindsight because it just ding, ding, ding. So I had a lot of that. And so that was good because that's that confidence building and whatnot. But the thing that I struggled with the most, that I need to really hunker down and make a plan. And so that's what I'm going to spend the rest of this year, and however long it takes really, but into January, is try to figure out what my rhythm is, what my method is, and make a plan to execute. So at this point, I have a plan as far as the TA and the chart reading and whatnot. I'm failing on my plan when it comes to consistent execution of position size or risk management or I keep all those things in mind, but I don't have a regular, okay, I'm going to take this trade. It's going to be this much. It's going to I do too much evaluating in the moment, where I do still take risk and mitigations into consideration, but I don't do it, to the point of like when on some of your plays where you're hit this level, boom, we cash it out, we capture this, same thing, rinse and repeat. So I really need to focus more on that, because I'm starting to feel the burn associated with that level of variability and unreliability in the trading. So that's kind of what makes it a mixed bag for me, is huge year on skills, confidence. And it was the last 6 months probably where it really felt like the last 3 years of trying to get a handle on this was really coming together. But now I'm at the point where I have the confidence in the skill, but now I need to make that method in the system. And part of that system needs to be to break out. Like I'm expecting to be making a lot more of an appearance in the equities world because that thing I mentioned with the volatility in the crypto space, it's at the point where it was really nice, quote unquote, because you could execute learning charts, and as long as you were risk mitigating on small positions, wash, rinse, repeat. You could just crank things around. But I'm at the point where I trust the TA, and then we get these wild volatility wicks and things like that, and it's just messing me up. And so I need to get a little bit away from that and use, I want to say stable, because there's nothing stable about the stock market. Look at the chart today. But I need to branch out, I guess is the best way to put it. I need to branch out and not be looking at the same 3, 4, 5 tickers, because when you look at the same 3, 4, 5 tickers, there's an emotional there's an emotional attachment when you're looking at the same 3, 4, 5 tickers, and it's just not helpful when you're trying to do emotionless swing trading, chart reading, and all that good stuff. So yeah, I'll take it as a mixed bag, but I would label it a good year overall, especially because I have targets. I have things that I know I need to achieve and things I want to achieve. And when you're growing in market participation, even if it's rough, choppy waters, I would say there's nothing better than being at that point where you have targets and you have goals and you know what you need to do to get there. So to me, that's what it's all about, is just continuing to plot realistic goals. And I enjoy the process of sitting down and, all right, let's figure it out. So yeah, in a year from now, maybe I'll be talking about how the system works.
So you talked a little bit about kind of how you got a higher confidence in yourself and your skill set and things like that. But you also talked about how you really feel you're not disciplined down to a strategy. Do you find that those are kind of counterproductive to each other? What I mean by that, right, is a lot of times you'll get different athletes or different people that become really good at their skill set, and then they tend to decide, oh, well, I don't need as much of a strategy, or I'll just wing it, or I can navigate in the moment type of thing. So do you ever find that is counterproductive to your goal of kind of becoming more mechanical?
It definitely can be, and I think the way that it is in what I've experienced goes more to the narrow scope of where I'm executing those skills. And so going back to the 3, 4, 5 tickers that I'm looking at, because the thing that I've experienced the most in the last month or two, actually the last 2 weeks, like I said, the surprise of those pullbacks and those liquidity sweeps, is because again, I said they were a surprise. That part is true. But when I was looking at the charts, there was a thought in the back of my head of, did we just fail before this happened? So on the daily chart, there's like 3 or 4 candles before things actually hit the fan and the floor, where there was a question in the back of my head, of, did we just fail? Was that a critical failure? And should I be careful? Should I be risking off? Should I be preparing for a hedge? Because it's not just a failure to make a new high is not a position where you immediately take a short. There's a whole different structure set up to actually enter a short. But a failure to make a new high, that could be a warning sign. That's a little Claxion saying, hang on a second, we didn't do what we needed to do. If you're still believing in this long term, start to prepare for alternative possibilities, spot your invalidation and all that sort of stuff. So I feel like where that skill and the needing the more methodical approach was working against me was, again, in that narrow scope where you should never marry a chart, marry a ticker. And there's a handful of tickers where I think I'm finally at the point where I think that's really affecting me the most, where I let it go for a while because I was just making dumb moves. I was making poorly reasoned EA reads on the chart. But now I'm noticing the reads I'm making are good. And when they're in the bias that I want them to be, they're spot on. But then that little voice of like, did that just do the reversal thing or trigger a concern? then the emotional attachment kicks in. It's like, nah, this is going to do this thing because that's what I said it was going to do. So when you start to diversify, and again, then the system plays into that of that shouldn't even matter to some degree. I should have a system in place, like I've even preached on the show, of like when a position is entered, orders are all set. There's a profit order. There's potentially, when you hit the profit order, there's potentially a trailing stop or whatever you do to mitigate ever taking loss on a position once it enters profit. And so those are a lot of the mechanical things that I'm failing on. And some of it is because they don't exist as strongly and readily available as I'd like. But that's kind of an excuse. There's definitely a lot of it that is just on me to own the system and make it better. So I think diversifying and getting outside the box is going to really help detach emotions from the system.
All right. Sounds good. So as you're kind of gearing up to 25 here, and you said you're gonna work on developing a system, at the end of the year, into January, whatever. What's that look like, and what other goals do you have next year? Is it really just to become more mechanical and diversify out? Is that the primary?
I would say it's definitely the primary. We talk. Plug to the Discord. We talk in the Discord. There's been a lot of conversation lately around VIX premium selling. Actually, I believe there was just an episode on that in my absence. And so I do want to branch out into some of those things, because one thing I do love about the premium selling, specifically the premium selling setups and whatnot, is, would you agree if I say this sounds a little more binary than I wanted it to be, but I'll say it anyways. Every setup in the premium selling strategy has a deterministic data point to it. Is that too vague, or would you somewhat agree to that?
It has a high probability of a deterministic endpoint. So I think you can kind of, when I think you say deterministic, maybe you mean like the ability to enumerate the endpoints and what you do at it, right?
Yeah, like the things that trigger the entry, like the conditions that are met, is what I'm referring to.
Oh yeah, definitely. The entries are super easy and bright now that I've kind of colored those. I thought you were kind of asking the outcome, right?
Oh yeah, no.
The outcome with high probability it can be slightly deterministic, or high probability for deterministic. But what I think you can do is you can really prepare for all the outcomes, and then know if it's worth it to enter given those outcomes.
Yeah, and so that is along the lines exactly how I view it. And so one reason why I want to branch into it, purely because I still struggle with being excited about it. And some of that is just ignorance. Some of it is just not spending the time to learn it and whatnot. But I'm totally fine voicing that non-appeal, because like you said earlier, like I do want people to understand things cannot be appealing, and that's just not your part of the market. Go find something that is. There's stuff all over the place. But one reason I want to do it is because that it has that more, purely from an entry perspective, it has that more deterministic, if this, then this, then this, then we enter, is almost a hedge. Hedge isn't the right word, but it's more of a stability marker against some of my trading. And so what I mean by that is, one thing I'm realizing I'm struggling with the mechanical system of swing trading is, in theory, there are clear entry signals for a swing trade. In theory.
Yeah, I know what you're getting at, and I think the better way to kind of say it is the way that the data is viewed in the swing trading and the price action is a lot more subjective to the viewer's perception. Yeah. Whereas in my opinion, the criteria that I use for entry and premium selling is a lot more objective and black and white. and there is no artistic skill that you have to learn. And that's one of my struggles with the price action is it's kind of like looking at clouds. It's like, oh yeah, look, there's a nice puppy dog, and there's a cat chasing a lion, and some people look up there and go, huh? And I think that is the subjectivity of the gray area. Now, once you look at things enough, okay, now you start to see patterns, start to see things the same as everybody else. Whereas in the premium selling, it's a lot more numeric, a lot more kind of hard science based. When I say hard science, I mean you're like, okay, the volatility is in the 67th percentile. Okay, that's above my 60 percentile target. Great, we're in extended volatility territory. And so I think it's a lot more black and white and objective, and not so, up to your own perspective.
Yeah. Yeah. And that's exactly what I'm getting at, because I enjoy that. I like the phrasing of artistic interpretation. I mean, there is firm fundamentals to it, but there's so many different ways that people price action, trade, and whatnot. So artistic interpretation is fine. And that's what I'm feeling is, as much as I want and think that I've created a mechanical structure to do that, the mechanical structure doesn't kick in until the entry is made. Making that entry is just always going to be really hard to nail down on an objective level, like you were saying. Whereas if I can make it a goal for 2025 I still want to be doing that swing trading stuff because, again, I enjoy it. I think because of that creative process, that creative freedom. But I think that's why I want to split and have more exposure to the numerics, to the number system, where it's just ding, 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 met, enter, here's the exits, blah, 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 done. And so I don't want to say that's a hedge to my trading, but it is a stabilization or effort. Not guaranteed to stabilize anything. And then taking it one step further to recent conversations in the Discord, using VIX premium selling very specifically as the way that I do that. And curious your thoughts on that now with the baseline understood, specifically because even in your options plays, your earnings plays and all that stuff, there is a lot of numerical data sets to take the lead from. I really feel like on the VIX premium selling, or even I guess maybe they're straddles or whatever, that feels even more numerical because of the pure fundamentals of VIX. Yes, the VIX could blow out way above what you're expecting. But it has that almost required law of nature to deflate. And so therefore that becomes a very reliable data point that takes all creative freedom out of the process and lets you just crank the wheel.
Yeah, I think you should explore it, because I think you'll find it's not quite the holy grail you wish it to be. And a lot of that is it is very profitable and can do very, very well on spikes, basically when the market panics. And unfortunately, that just doesn't happen that often in the current market and the current endeavor. And so when it's kind of cruise control, business as usual, it's really hard to get what I consider appreciable premium off of the call side, simply because everybody knows VIX trends down. And so you really have to look for it's kind of like an even regular option selling premium that I do on underlyings and stuff like that. What really, and in past years, this has been my experience. When you chase it as just a pure volatility trade, you have less success than when you go with the extended volatility. Look for that abnormal case. Look for where it's stretched beyond where it should be. And that's really where your probability increases. That's really where your premium values come in. And that's true on the VIX too. So when the VIX just spikes up to crazy levels, 20, 30, in the rare circumstances, 50, 60, that's where you can really cash in on that overstated volatility and that overstated premium. Same with the regular underlyings too. You look for that elevated volatility state when you're trying to effectively short volatility.
So stay tuned. Let's see. The best ideas never delivered sometimes. So we'll see. We'll see what I'm able to pull off. But that's my goal. That's my plan, to try to start putting these things together. I don't want to say or indicate that I regret anything up to this point, because I do believe that a lot of it has helped refine that skill. But I'm acknowledging, like I said, acknowledging within myself that the skill is at a point where it needs to be complemented with a more rigid mechanical structure, so I can keep track of the exact knobs and levers and start to really leverage probability and grinding the positions. So with that said, what the heck's your plan? What are you, I mean, it sounded like you did everything this year. So what's left for the sprocket?
Yeah, I mean, I struggle. I think about that, and one of the big things for me is trying to see how much tighter I can keep my plays. What I mean by that is I had some really big drawdowns this year, and yeah, I come back from the drawdown, roaring back, if you would, and I don't know if I can smooth that out, and that's what I want to try to explore is, can I make if I just quickly go back to that S&P chart that I showed you, right? Can I smooth this curve out so I don't get this, lump valley lump, and you see that nice S&P curve just kind of gain. My strategy in my theoretically should be able to just be a gain with tiny little bumps in the way. I think that massive valley there in the middle, that shouldn't have happened. And I think that's part of my, 25 strategy, is to look at that and say, what is causing my massive drawdowns? What is causing that? Because if I have everything deployed in a pretty neutral way and I have it balanced across the market, I should be able to smooth that out. And I should be able to beat the return on the S&P, I believe. And so that's really where I want to focus my 25, is just improve the consistency. And yes, I was consistently profitable, but I want to improve that such that it's more, because my end goal here, right, years from now when I go to retire, is I want this strategy to be the thing I do for my retirement income. Yes, I have investments. Yes, I'll have things like that. But at the end of the day, I want to try to create an income stream that is low maintenance, and not dependent on a lot of other things. And I feel like this volatility premium strategy is really where that can be part of that, because it's a delta neutral strategy. So it shouldn't matter market up, market down. It should return based on selling time and selling volatility. And so that's really going to be my focus in 25, is how can I further advance and further gain more experience to making this a very repeatable and predictable income stream. Well, that brings us to the end of this week's episode. I really look forward to, ironically, this particular episode each year. And then the other thing I always look forward to each year is doing taxes. And the reason is because both of those points in time, you kind of go back and reflect on the previous year, and you lay a lot of stuff out, and it helps. You don't notice it along the way, but when you look at the aggregate backwards, you notice a lot of trends, you notice things. And so I always look forward to this. And I encourage every listener out there, probably all 5 of you, to do the same reflection. If you're in there trading, or if you're trying to learn something, whatever it is, reflect back on your achievements of the year. You might be surprised at what you actually achieved. And even if you happen to be at a low point right now, looking back can somehow be uplifting. Or if you're at a really high point right now, looking back might be humbling, to say, oh yeah, there was this time. And either way, just constructively looking back and do so with a lens of, how did it go? What can I do better? What can I keep doing? That retrospection really helps build your path moving forward. So, take time over the holidays to do that. Take time to look back. Take time to think about and plot out, write down what you want to achieve in 25 as far as your strategy goes, as far as your learning goes, plot little milestones along the way. Hey, by February, I want to blah. By end of April, I want blah. And just kind of work towards that and stick the little Post-it notes somewhere where you kind of see it every day. And you just remind yourself of these targets and these goals and work towards them, whatever they might be. So aside from that, the year's coming down. We're going to have a couple more episodes. Viper, I didn't mention this at the beginning. I forgot, but I actually think the next episode that you and I are able to record together will be our 200th episode. So I don't know, I guess that's cool. If you keep track of those things, I only do because each time I edit them, I number them. I don't really know until I'm like, oh yeah, this was 197. So 200 is coming up there to start off 2025. And it's hard to believe that I've been recording these for as long as we have. And, we might make it to 10 viewers soon. I don't know. Anyway, hopefully you guys are having fun out there in the market and being productive and learning, and growing not only your knowledge, but your wealth. And I hope you guys all have a great holiday. Good luck out there. And remember, think outside the block.